Imagine this. Jerome Powell just hinted that the end of the Fed's balance sheet drawdown is near, signaling more money printing could be on the horizon. That's great news. At the same time, Binance is repaying $300 million to users affected by the October 10th liquidation chaos last Friday. And BlackRock's Bitcoin ETF has surpassed $100 billion in assets under management. So what does this all mean for Bitcoin and the broader financial markets? I'm glad you asked. Stick around because we're breaking it all down right here, right now. What's up, family? It's Coach Masi, and you're locked in to the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, disciplined, and ready for opportunity. Let's dive in right now. So earlier today, this morning, Federal Reserve Chair Jerome Powell addressed the National Association for Business Economics annual meeting, indicating that the central bank's long-standing policy of quantitative tightening, or QT as it's called, may be approaching its conclusion. He highlighted emerging signs of tightening liquidity conditions, including a general firming of repurchase agreement, the repo rates, and temporary pressure in money markets, according to Reuters. Since 2022, the Federal Reserve has been reducing its balance sheet from a post-pandemic peak of $9 trillion to the current bond maturities. This process, known as QT, aims to remove excess liquidity injected during the pandemic. However, Powell noted that with the reverse repo facility usage nearly at zero and bank reserves declining, concerns are rising about potential financial market disruptions. Money printing is coming. You see, Powell emphasized that the Fed is taking a deliberately cautious approach, his words, to avoid repeating the money market strains experienced in September of 2019. He stated that the central bank may soon stop shrinking its balance sheet when reserves are somewhat above the level deemed consistent with ample reserve conditions. This shift in policy could have significant implications for various asset classes, real estate, stocks, and Bitcoin. Historically, periods of monetary easing have been favorable for risk assets, as increased liquidity often drives institutional investment. Therefore, the potential end of QT may set the stage for a new phase of growth in the Bitcoin market. Moving on to more of a crypto space, Binance has announced a $300 million compensation initiative for its users that were affected on October 10th last Friday due to their liquidation events that happened, right? This move is their Together recovery plan, and it includes distributing token vouchers to eligible users and offering low interest loans to institutional clients. This initiative aims to rebuild the trust and stabilize the market, signaling Binance's commitment to the user base and the broader crypto ecosystem. Though, in my opinion, until wash trading regulations happen for Bitcoin and crypto, this will continue to happen. No perp trading, no leverage, please. Now let's dive into institutional adoption, which is reshaping the future of finance. BlackRock's Bitcoin ETF has officially surpassed $100 billion under management. It's currently the largest crypto-focused institutional vehicle in the world. This milestone, well, is not just a headline. It represents massive capital flow from traditional finance into digital assets, signaling confidence from some of the world's most influential investors. CEO Larry Fink has also highlighted, especially this morning, the rapidly expanding world of tokenization. BlackRock is actively developing in-house infrastructure to tokenize a wide array of assets, from real estate to stocks to bonds and other financial instruments. Tokenization allows these assets to become digitally tradable, liquid, and globally accessible, transforming basically the way markets operate. This dual development, a 100 billion Bitcoin ETF, and accelerated tokenization initiatives really makes BlackRock a pioneer in the digital asset revolution. For Bitcoin, crypto, and the broader financial ecosystem, this is a game changer. You see, traditional institutions are no longer on the sidelines. They are now actively shaping market trends and adoption. In short, if you're watching the growth of digital assets, BlackRock's moves are a clear indicator that the mainstream financial world is embracing Bitcoin and tokenized markets at an unprecedented scale. I couldn't be any happier. So, what does this all mean for Bitcoin and broader crypto markets in general? The convergence of potential Federal Reserve rate cuts, increased liquidity, and massive institutional investment is creating an ideal environment for Bitcoin's next major price move. You see, historically, periods of monetary easing and liquidity injections have been extremely favorable for Bitcoin, as they provide capital for institutional accumulation and reduce pressure on risk assets. Now, with BlackRock's ETF passing 100 billion, Binance repaying the 300 million for affected people, the stage is set for sustained upward momentum, I believe. Great Q4. However, while the setup is promising, it's critical to stay informed and understand the underlying market mechanics. Bitcoin is not just reacting to headlines. It's being shaped by centralized exchange flows, institutional positioning, and macroeconomic trends. Recognizing these dynamics, well, they allow traders and investors like yourself to navigate volatility with confidence and position themselves for a great Q4. Looking ahead, we still have several key economic events that could influence the markets this week. Tomorrow, U.S. retail sales report. A strong report could signal consumer confidence. October 16th, Federal Reserve Beige Book, insights into regional economic conditions. These events, coupled with Powell's recent comments, will further provide clarity on the Fed's monetary policy direction and its impact on the markets. So here's my question for you, the hodlers. With Powell signaling potential rate cuts, Binance compensation initiative, and BlackRock's massive Bitcoin ETF, how do you see these developments impacting Bitcoin's future? Drop your thoughts in the comments. I want to hear from you. If you got value from today's breakdown, smash that like button, subscribe to this channel if you haven't already, and share this video with anyone who loves Bitcoin and financial news as much as you do. Remember, this is not financial advice. It's for educational purposes only. It's for you to stay informed and prepared. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.